All right, traders, a very warm welcome to you all. I'm Devang from the Financial Analyst, and I welcome you to the segment in which we discuss about the intraday outlook of the markets tomorrow for the Indian financial markets, which is Tuesday, 29th of June, 2021. I want to start this session. Let's kick off this 20-30-minute session with the statement of one of the chief macro strategists of Nordea AMC, Sebastian Galli. He said today afternoon, he said very, very interesting that the global equity markets are in a state of ambivalence and they should find their footing by the end of the week, quote unquote. Now, what he said is something I believe everyone right now is feeling. Ambivalence means they're contradicting, there's confusion, there's utter, state of confusion, anxiety. What's going to happen in the markets? Markets give you a gap up. Eventually, they get sold into. Markets are opening lower. They get bought into. No one knows what the markets want to do. At the same time, higher levels have call writings, but still markets are opening gap up. The FII, DII cash data suggests some other picture. The derivative data suggests some other picture. So today, let's talk about everything and try to make things easy, like we did yesterday. So just wanted to read that out for you. What he said is something that I personally felt. I personally harmonized with that, so I wanted to share with you. So thanks, Sebastian Galli, for that statement. Let's talk about what's really happening in the global markets. We can start off with the global markets, or better off, we can start off with what happened today in the Indian markets. Last night, what did we discuss? We discussed something very, very simple. If I open the charts of Nifty, I said you can be an aggressive buyer if you are opening either flattish or small gap up, gap down. If you're opening in this range of 870 to 840 were the words, you can always go back and check that video. And if you open in that range, if you get a good 15-minute breakout, you can always be a buyer. And at the same time, if you break 15,900, you start to do aggressive buying. But the conditions were very simple. You have to open in that range. See, now you have to see what happened. Try to understand the markets like how I am interpreting them. If you remember all these views, if you got clarity in the markets by seeing my last night's video, please let me know in the comments. Please like, share, subscribe, comment. This will really help us increase our reach and also will help us bring a smile to my face. Thank you so much for the support and love that you shower on me. But what happened to yesterday morning? You opened about 70, 80 points gap up. I clearly specified even in today's Telegram and yesterday, Monday gap ups are always sold into. That's why I have made a GAN master course for you, episode 3. I want you to go back to my YouTube, watch that. I know GAN is difficult to understand, but what I have produced, please watch it for a minute. You will really understand what I'm trying to portray. So today morning, strong closing on Friday gives you strong opening on Monday, but got sold into. And I clarified you can't buy at the top. If you want to buy, you need a flat opening and then you can buy. And eventually markets started tumbling down. That's exactly what we discussed even today when the markets were in entirety, when they were playing out. And then I sent a message to all of you. I said that the infamous W is playing out. You all are aware of that, my W pattern that I've taught you. When the panic selling starts in and markets start to give you a breakout on the upside. And I said, if 15,851 is broken, I said on the 15-minute chart closing, then you can start to buy. But see what happened. We never ever got a 15-minute closing above 15,851. This is all about being disciplined. As I said in the voice notes also, don't trade just to make money. If don't forecast the market, if you see something happening in front of you, if you get a confirmation in the market, play it. I want to give you one piece of advice. I think is very, very relevant here. Hope you take it in a positive note. I'll try to relate the markets with our real life, or I can relate it with sports. Football's happening right now. Tennis is starting. Wimbledon starts today. Everyone in India loves cricket. Let me try to correlate everything. Let's assume you play cricket. All right. And, you're batting on the pitch. You have a bowler like Malinga in opposite in front of you. And, Malinga is, he's fast bowler and he bowls a bouncer, right? Whenever a batsman gets a bouncer, it really frustrates him, right? It's very frustrating. Let me give you another example. You're playing tennis. Wimbledon starts. Let's say Djokovic serves. He's already done with his 3 challenges in a set. Djokovic serves. It's an ace. Djokovic knows it, but since he's done with his 3 challenges, he can't ask for a review. The referee says it's an out, it's not a fault. So, he has to move on. You can't, what I'm trying to say is, if things go against you, taking the example of sports, if things go against you, you can't still be frustrated. You have to move forward, but you can't move backwards. That's what I'm trying to tell you. Same thing is something you have to relate with the markets. When you get a bouncer, you can't have the attitude that, I'm going to come next ball, I'm going to come on the front pitch, I'll, charge and hit a 6. If you have that aggression, it's not going to work out, maybe once in 10 times. At the same time, same thing with tennis. If you hit a fault, if it's not a fault, but if the referee calls it a fault, you have to move forward. Because if you don't, the game's gone. You're out of the match. Same thing happens with the markets. Try to think of this way. You expected that the markets will break out. Let us say you bought it here in the anticipation of the markets breaking out. You shouldn't have, because the markets never gave a closing on that level. But let's assume you bought something here. And then the markets rejected that. 90% breakouts fail. You must be aware of that. You have to exit at this point of time. If you don't, you're basically having that aggression. You're having that frustration of proving the markets wrong. But please trust me, guys, it's the other way around. Markets are the ones who take you as their slaves, who take us as their slaves, and markets prove us wrong, not the other way around. This is what I'm trying to tell you. You hit your stop loss here and move forward. If let us say markets again break out, then you enter back again. That's the biggest mistake I've seen retailers making. Even I made this mistake when I started my journey. When I hit my stop loss, I always closed my account. But whenever the markets again moved in my direction, I never entered. With that logic that I've hit my stop loss once, I'm not going to get into the trade again. But why not? SLs are there to protect you from making a big mistake. If you made a mistake once, fine, we accept it. But again, if the markets are respecting your analysis, take the trade again, have that same stop loss, but take the trade again. You have to take the risk where it is due. So all through this banter that I wanted to share is that, please don't be afraid to take risk. If your outlook of the markets is wrong, accept it, move forward, not backwards. Don't be frustrated. Take a stop loss, but do take it. If the markets move again in a direction, go in the direction again with that same amount of stop loss. That is what I'm trying to explain through this entire, logic of this examples. But please, guys, don't be frustrated. One moment of frustration, trust me, can blow up your trading account. That's how stressful markets are. So today was an easy day. If you ask me, it was not a difficult day. The moment markets opened, gap up, you couldn't buy. I personally wanted to buy the markets above 851, but I never got an opportunity. And I said this very, very clearly even there that, please keep a track on the banks. I'll talk about that later. I said follow through is not provided. I do not have any incentive to go long yet. I will play the market, not the forecast. It was very, very easy. It wasn't difficult at all. So I hope you understood this. If you enjoy these videos, if you enjoy the banter, if you enjoy the advice I give you, let me know in the comments, #banter with Devang, whatever you like, #TFA family. That would mean a lot to me. Please like, share, subscribe, comment. That would really mean a lot to our community and for us to reach a larger audience. Let's talk about the global markets for a bit, because I've told you even yesterday, it's always, you can't always start with Nifty. You have to keep on linking all the markets, all different segments, whether it's bonds, dollar, commodities, stocks, etc. The equity markets. Today, you can see the FTSE is not doing very well. So what's the reason behind that? There are a couple of reasons. Number one, the Burberry share has plunged today. FTSE, by the way, FTSE is down about 1%, approximately 1%. One of the reasons is financials are dragging the FTSE down. Burberry is another company which is driving the London Stock Exchange down. You can see it's down about 8.5%. The news is that the Burberry CEO is stepping down. So because of that, you are seeing some panic happening in the FTSE 100, especially the London Stock Exchange. Another area of concern that we're seeing in UK, some cases were coming up all over the world. That's another issue. But the other thing is the airline stocks are not doing very, very well. Companies like Wizz Air, Ryanair Holdings, IAG, EasyJet, all these companies are down a lot. I'm going to show you, for example, I can show you EasyJet. This is one very good indigenous airlines of Europe. You can see how the EasyJet shares are down 4.96%. You can see all the companies. This is because that a report said Germany would attempt to ban British travelers from European Union, regardless of whether they have the COVID-19 vaccine or not. So because of that report, you can see all the airline stocks are plunging. So Burberry, financials, and the airline stocks are dragging the FTSE 100 down. You can also see Germany is down, France is down. Even the stocks, the top 600 companies in UK, in Europe, from the 17 countries, even that is down. So Europe is not having a very good time. If you talk about the American markets, Nasdaq is resilient. It's just broken out again today. We're at the lifetime highs on Nasdaq's. Hold IT. That's a signal for me to tell you guys, please continue to hold IT. You can't exit IT stocks. Fabulous earnings coming in from IT companies in America, led by Accenture. And that is what is going forward. You can see dollar is starting to come up, helping the Nasdaq index go up. But at the same time, S&P is flat, and you can see Dow Jones down about 223 points. Why is S&P flat? Because S&P has a lot of components from Nasdaq. At the same time, Dow Jones doesn't. That's why you can see how Nasdaq is in green and Dow Jones is not. So you can see the IT companies are doing well, but other than ITs are still struggling in America. So overall, you can see how the global markets are not doing so comfortable, except the IT companies. That is one thing that is something that we should talk about. If I talk about the FII DII data, let's talk about that. The FII DII, the FIIs continue to sell in the cash market. There is every single day they're selling 1,000 crore plus. Today they've sold about 1658 crores of equity in the cash market. However, DIIs are on a buying spree. That is something very, very interesting. If you haven't, by the way, joined our Telegram channel, make sure you do that. It's totally free of charge. It's called TFA Investments, or you can search The Financial Analyst and you'll come to my Telegram channel. So we provide a lot of live markets commentary and maybe some trade ideas if we get them. So one thing that you already are aware if you watch my channel aggressively is that DIIs are value players. I'll put it in very simple terms. DIIs, the domestic players, they are value investors. However, FIIs, they are momentum players. FIIs go with the flow. However, DIIs find value. So you will see generally how DIIs sell at the highs, how DII book profits at the highs. But why DIIs? The question is, why are the DIIs every single day buying the market, even at the all-time highs on Nifty? That is one reason why markets are still resilient at the highs. The moment DIIs start to sell, you will see that the markets do not have any support from the domestic players, and you can see some profit booking further on happening in the markets. But I would say as long as DIIs continue to buy, that is basically holding the markets on the upside. However, today the data that's come in is not so good. The data that has come in is not so good. You can see how the FIIs have some other perspective of the market. So as of today, see, again, I want to make things very, very clear. Data is not everything, but it is something to consider. Please try to understand. If data is bad, doesn't mean you sell tomorrow blindly. Just like today, how if markets open gap, you can't just buy blindly. You have to be tactful in the markets. You have to be very, very smart. So data is not everything, but it is of some importance. So you can see that today, clients have been buying everything. You can see the index calls. They were short on the calls, but today they have reduced their shorts. They have added some exposure in calls. That is, if the clients are bullish, which means that the markets are FIIs basically have sold it to them. Markets, it's not a good thing for the markets if the clients, people like you and me, are bullish. You can see the index futures, how they were holding huge quantities of net shorts, but now it's coming down and down and down. So they are adding index futures, which means that it's not a good signal for the markets. Same thing for the puts. FII, the clients, they are short 197,000 contracts on the puts. So if they are holding puts, means they're bearish, but if they're shorting more and more puts, that means they are bullish again, not a good signals. What's concerning is how the clients, are sitting on 9.7 lakh worth of stock futures. This is an abnormal quantity I've seen in my life. I've personally not seen such high quantities, but this quantity keeps on going up and up and up, which is again not a very good thing for the markets. At the same time, you can see how the FIIs have reduced their calls, how the FIIs have cut down their index futures, how the FIIs have increased 20,000 puts. At the same time, very, very concerning, stock futures don't lie, how the FIIs have really added 15,000, 13,000 more shorts on the stock futures. So this is one thing I would say that is concerning about the markets. High call writing at 16,000 upper levels, beautiful amount of call writing. See, there's call writing everywhere, put writing everywhere. We all are aware of that if you read the data. But why is there so much call writing? Why is the market not able to give a follow through? Why is the data giving us such picture? If the FIIs really want to buy, if they want to take the markets higher, why is the FIIs trying to exit their positions? Even if you see the pros, the proprietary traders, the HNIs, even they have exited 51,000 calls. They were holding 1,600 calls. Now they're short on calls. And that's a very, very big picture. And you can see the long exposure is not much, but the short exposure or the exposure to the bearish side is a lot. I'm not saying go short aggressively, but if that movement happens tomorrow, I'll explain this. If it happens tomorrow, you know why it is happening. I'll come to that when I talk about the market's plan for tomorrow, which I'll come to in a minute. But the data is not good in the cash market, at the same time in the derivative market, something that I'm not so comfortable with. If I look at the SGX Nifty, again, it's at 890, just about 10, 20 points, 15 points. So it's just flattish, not something I want to pay too much attention towards. So that is about the global markets. Even dollar is doing fine. It's flattish. Crude's come down, good for India. The yields have come down. That is fine. Nothing to worry about there. Now, before I come with the index, I want to throw some light on the stocks. PSU banks, absolutely stunning. I hope you are in PSU banks. I've told you so many times, please don't exit PSU banks. Sit on PSU banks. Any fall comes in, aggressively bought into. So please, guys, keep on sitting. Have some faith on me. When Baroda had that 1,000 crore loss, everyone panicked. I told you don't panic. Today you can see the results. You should be in a good 10-15% profit on Baroda if you're sitting with me, and even the other PSU banks. ITs are doing fabulous. Naveen Fluorine in the API sector doing fabulous. So all the recommendations that we have given you in equity are working to some extent, and some are doing very, very well. PSU banks above 2,600, yes, is a big fat round number. That does become a resistance. That does become a psychological level. But if for some reason you break 2,600, you really get some good rally on the upside. So if that happens, stay invested. You can always start to buy fresh in the PSU banks. If I talk about the private banks, they did come under some pressure today. They still haven't broken out. You can see how the private banks have some kind of resistance coming in at 18,750 level. So I think once this level is broken, that is when the aggressive buying will start in the private banks. I would say the rally that happened in the Nifty was on account of the public sector banks. Some part was owed to even the private banks, but primarily the public sector banks. Because when respected finance minister had to come today, a lot of people were expecting relief measures, but those events that was announced today, they became non-event, not a surprise for the markets. Markets were already expecting that. People were expecting something on account of the privatization. So that is why PSU banks have been in focus for the last couple of days. So that is something about update about the banks. Going forward, see, just one very quick update about ICICI and Axis. See, private banks, the top three are HDFC, ICICI, and Axis. So if the Nifty bank has to go up or it has to go down, these three guys have to perform. Axis Bank is already broken out. Today was a day of halting. Doesn't mean tomorrow it will blast. You can halt for 3 days. That's the rule I like to follow. You can always halt for 3 days. You've already done that earlier in Nifty when we got 15,000 calls a month back in May. If you have been following from that point of time, you will remember that point. But it is possible that markets can consolidate for 3 days and then it can give a move. However, it is also possible 770 level is broken tomorrow. All I'm saying is if 770 level is broken tomorrow, you can start to be a buyer in Nifty Bank. Why? Because if Axis Bank starts to move higher, it will drive something even in the banking stocks. Others will also follow, and it's going to create a ripple effect. And Bank Nifty already is much more comfortably positioned right now on the intraday view. Nifty is a little bit weaker on the intraday. I'll come to that in a little bit. But the 770 level is the one level that you need to follow. I would say if you get a good 15-minute closing above that, you can start to be buyer. But again, where it opens is important. You can't expect markets to open gap down and then buy this. If you want to, trade a breakout, it's important you open somewhere over here and then you break out. Please, I hope you are very well aware of these points. Same with ICICI Bank. ICICI Bank has already given you a breakout. It's comfortably positioned, but at the same time, the highs of this doji have to be broken to give a follow through. Very similar setup as you saw in Axis Bank. The doji highs are coming right now at 653. So if that level is broken, you can expect some buying to flow into Nifty Bank per se. But again, if the lows of the doji are broken, that will also trigger some selling pressure to come in. Just keep that point in mind. So if you want to be an aggressive buyer, make sure the lows are not broken. If they are broken, you can expect some kind of selling pressure. Same applies even to Axis Bank. If I look at HDFC Bank, another big guy, you can see how the HDFC Bank has been consolidating for a very, very long time around this 1520, 1525 zone. So the moment this zone is taken out, then we can see aggressive buying. You're all very well aware how 10 points means 200 points on Bank Nifty. On HDFC Bank is 200 points on Bank Nifty. Why Bank Nifty was down today is because Reliance and HDFC Bank have not at all performed. And if you can see a bearish engulfing, now a lot of things could happen. Something very important. I'm not trading the banks right now, but you can see some kind of bearish engulfing coming in at the resistance, right? That obviously is not a good picture, but that does not mean you sell aggressively. Again, if, for example, tomorrow markets give you a gap up, and if you open somewhere at 15.15 and then these highs are broken, you can start to buy aggressively in the markets. However, at the same time, if the lows are broken, that again starts to create some selling pressure. So what you need to do tomorrow and for the coming days is observe the highs and lows that have been made today of the banking stocks, HDFC, ICICI, and Axis. If the highs are broken, it will create some buying pressure. Already Bank Nifty is doing fine. However, if the lows are broken of these individual banking stocks, some kind of selling pressure can also emerge. Why? Because already these guys are at a resistance. So you will have to see what side the follow through happens, if it happens or not. Talking about Reliance, let me talk about that for a little bit. Reliance has not been doing very, very well. I already explained that even in yesterday's video, there is some selling pressure that's come in after the AGM. People are booking profits, that's all. Now, I have a rule, that I've been following for some period of time. I have some ratios which are called 5:3 and 9:5. So some calculations that even Gan has specified in a lot of his work. What is 5:3? 5:3 basically means if you see a rally for 5 days, you can expect 3 days of consolidation or correction before the movement follows on. 9:5 means if you see a rally for 9 days, you can expect 5 days of correction consolidation before the movement carries on. You can apply the same things even on the downside. It becomes very, very important. Reliance, if you for example count the day of the AGM, 23rd June, one day before that, it's already fallen down for 4 consecutive days. If you think about the 22nd June, Reliance has already fallen for 5 consecutive days, which means that if market sees some buying pressure coming in, Reliance could start to come up for 3 days, 5:3. I don't know if it happens today or not. It's also possible it doesn't stop. Let us say Reliance falls for 4 more days. That could also happen. I just got by the way, sorry to interrupt. I just got a message that Narendra Modi, the respected Prime Minister, is going to hold a crucial meeting for the cabinet at 5 p.m. on June 30th, which is day after. It's Wednesday. So just one event that you have to keep in your mind. So just got an update. So I wanted to alert you guys. So what I'm saying is it's possible, the reversal happens tomorrow. It's also possible it doesn't happen. See, we are seeing some technical levels coming in at 2040. We are seeing 2000 levels. Even these levels could be seen in Reliance. See, as long as you're below 2100, there's no point to buy. If you want to be a buyer in Reliance, at least wait for some kind of support and wait for some kind of buying pressure. If, for example, markets give you some kind of hammer, something, then you can expect, 5:3, 3 days of correction on the upside. If markets don't give you that, if they still carry forward, you can expect even 4 more days of correction on Reliance, and that can toll on Nifty. And after that 9 days fall, you can expect 5 days rise, and then markets will decide what they want to do. Hope you're getting the idea. Even today, TCS was down 1.5%. Even TCS is one of the bigger constituents in the Nifty. That's why Nifty was very truncated, wasn't moving a lot. Let's talk about Nifty. Let's not waste too much time now. Excuse me. So see, let me open the 15-minute chart of Nifty. Again and again and again, 15,900 is rejected. We've talked about that Monday gap ups. We talked about everything in detail. If you aren't aware of that, I would request you watch my GAN episode 3. I would also request you to watch yesterday's video to get a better idea. See, I'll be very honest. Nifty right now is in a very tight range. This is one good thing that I like about the markets. You can see how Nifty is in a very, very tight range right now. And it's very simple right from here. If Nifty breaks on the upside, you can be a buyer, scalp on the upside. If Nifty breaks on the lower side, you can always scalp on the downside. On the upside, obviously you have 15,900. It's a very, very strong level. If you get a closing above that, you can expect some good buying pressure that comes in the markets. However, at the same time, if the lower levels are broken, you can expect some selling pressure to come in. I've already mentioned 810, the lows that was made today. If that breaks, I hope you have read these messages that I've sent today. I think they were very, very important. Yeah. So I said this message, I said good range is being made in the markets. It will give a good opportunity for a scalping setup depending upon which side it breaks. 15,810, 15,851. You got a good 20-30 point scalp on the bottom. So that also applies even for tomorrow. So today, the movement that happened in the last 30 minutes was induced by the finance minister announcements, the speculation that happens, people booking profit, people enjoying the announcement, they're buying positions. But again, it really matters where you open tomorrow. If, for example, you're opening in this range, observe the first 1 hour, 15-20 minutes minimum, wait for the movement. Don't forecast, wait for where the movements happen. If the momentum happens on the upside, I'm again giving you the level 15,851. I want a 15-minute candle closing above that. If you get a movement on the upside above that, I would like to buy. I'll scalp on the upside. I think 15,900 is open. I don't see any problem in that. If I get a daily closing above that, I would be really happy. I can plan my markets on the upper levels because a lot of put call writing is happening. Everyone will cover. It can give a really good momentum on either side. However, at the same time, the data, as you know it, I'm again saying we don't depend on data always, but it is something to be kept in the back of the mind. For example, tomorrow markets open flattish, what the SGX Nifty is showing right now. And what if the markets give you a good 5-10 minutes candle on the bottom? If markets start to trade below 15,800, 810, or you can even say below these VIX 790, you can expect selling pressure to even come in. That is what the data also suggests. So I'm saying is I will not hesitate if the markets come down. So please don't have a bias that मैं सिर्फ कल buying ही करूंगा. Don't have any kind of bias. Whichever side the market breaks, try to scalp in that direction. Play in the money, you will be safe. Play in a next week expiry, you will not have any problem. On the lower side, 750 is open, 770 is open. You can see how 680 is also open. Levels are open, even 730s are open. All these, swing lows, they become kind of supports. So, we will try to, if markets do come down, I will try to, see the first 15-30 minutes. If I get a breakdown, a good red candle, I will go short. And at every support, I will try to book profits. And if you ask me, should I buy right now? Should I buy at this point of time? Have I taken any BTST calls? I haven't. Why? Because I'm in the middle of a range. The resistance at the top, support at the bottom. I'm not going to play in the middle of the range. Let the markets come down. Let the markets come up for me to plan a trade on the better direction. But for intraday scalping, 851 broken, you can trade. If, for example, tomorrow markets get a selling pressure and the markets come to 680 kind of levels, I would maybe like to buy here. If I do that, I will surely let you know in Telegram. I'm very transparent about that. So make sure you are on Telegram. Bank Nifty, see, I'm again and again telling you, Reliance has to be tracked. You have to also track the banking stocks because metals has been helping Nifty to go up. But again, I'm not expecting metals to go up every single day 2-3%. There will be a day when metals start to, not shimmer a lot. So if the metals start to fade away for a day or two, if Reliance is down, HDFC Bank is down, Nifty can't be up. If you want Nifty to perform, you need one of the sectors to be really strong. For example, how on 23rd, 24th, IT went up 3%. You saw Infosys up 3-4% on, I think, the Thursday monthly expiry. So you want something to perform if the banks don't perform. But let us keep everything equal. Let's say nothing performs. You need the banking sector to perform. If the banking sector is in red, I've mentioned it again and again even today, if the banking sector is in red, don't expect Nifty to break out. If the banking sector is in green, you can expect short covering, which can really help you gain the momentum. Yes, one of the moves is due. I'm not going to be, I'm not going to fabricate things for you. You can expect a big move in the coming days, but let it happen. Which side it happens, no one knows. Let it happen. Everyone's forecasting, everyone's speculating. All I want to say is let it happen. Whichever way it happens, small stop loss will be protected by it, but we'll be in the right direction. Don't lose money in the first eighth of the move. Let it happen, and then we will trade it. Bank Nifty is stronger than Nifty. We're all aware. I've already talked about the stock specific approach. You can see how the markets are in a very, very tight range. If tomorrow the markets want to go higher, it's very simple. Bank Nifty can open flattish. It can open with a small gap up, but I won't like a big gap up like today. I'm again and again telling you, big gap ups like today, they turn into volatile. They turn into indecisive trades. They get sold into. Hope you made some money on that. People also short the market at that point of time. So just keep that point in your mind. If you want to be a good buy, if you want a good momentum in Bank Nifty, yes, we'll aggressively buy above these levels, but we can also start to buy on a flat opening, good breakout like this 15-20 minutes. If that happens, flattish opening, small gap up, small gap down, you can be a buyer. However, if the market, let's say, opens gap down and starts to trade below these levels, you can always scalp even on the short side. You have 35,100 pending, 35,000 round pending, 34,900, 34,800. All these 100-point levels are open. So again, it matters where you open. Track the stock specific, right? I hope that is very, very clear. Nifty Bank is getting ready for a move. Right now looks on the upside, but again, you can never be too sure about the markets. If markets are, for example, let us say they open flat, doesn't mean you buy immediately. Let the markets prove. For example, let's say they open flat and the markets do this in the first 15 minutes, then you can start to sell. All I'm saying is Nifty Bank are in a very tight range. The moment that range breaks, trade aggressively in that direction, have a stop loss, have your profits, risk rewards. You should know very well what they are, exit with a good amount of profits. But the moment, one tip I will give you, don't let a position run into a loss. For example, markets give you a breakout, you buy the market, maybe because of the data, markets again come down in the institutional zone. All I'm trying to say is if you buy the markets, trail the positions, trail your stop losses. So even if it is hit, you never hit a loss. That's the advice I can give you and end the day with. Hope the video was helpful. Hope you got some idea how you can play the markets tomorrow. That's all about for now. Hope you liked it. Please like, share, subscribe, comment if you're new. And I'll see you tomorrow for the outlook for Wednesday. Thank you so much and have a good night.